Welcome back to the Digital Asset Report. The architecture of the global financial system is being written from the ground up, and this week the White House signaled it is ready to cross the finish line. President Trump's crypto czar David Sachs announced Thursday that the administration is closer than ever to passing landmark crypto market structure legislation. Following a high-level call with Senate Banking Chair Tim Scott and AG Chair John Boozman, Sachs confirmed that a formal markup for the Clarity Bill is scheduled for January, stating that lawmakers look forward to finishing the job. This legislative push arrives alongside a complex shift in the macro landscape. The Consumer Price Index for November rose at an annual pace of 2.7%, cooler than the 3% forecast and a significant drop from September's reading. Core inflation also beat expectations, falling to 2.6%. However, this data comes with a massive asterisk. It is the first inflation reading since the 43-day government shutdown, which paralyzed Washington this fall. Because the Bureau of Labor Statistics was unable to collect survey data during the lapse, October has become a permanent blind spot on the record. However, for now, markets broadly interpreted it as positive.
I was surprised. It was a better number than anyone was expecting. Look, inflation's been very high. It's stayed high. It has not been coming down. People were expecting it to be above 3%. It was well below 3%. I think the president will take this as good news. The investors will think that interest rates will get cut more. It was a positive news. There's no other way to spin it.
Despite the cooler headline numbers, the market response has been defined by extreme fear. Bitcoin plunged below 84,500 this week, erasing a brief rally, and continued its sell-off on Thursday. But price isn't everything. The legacy banking world and the digital asset economy are becoming indistinguishable. In a massive win for mainstream adoption, Intuit has signed a multi-year deal with Circle to integrate the USDC stablecoin into TurboTax and QuickBooks. This will allow millions of Americans to receive tax refunds and make payments via stablecoins, in a win for digital asset consumers. And Intuit is not alone. SoFi has officially launched SoFi USD, becoming the first national bank to issue a stablecoin on a public, permissionless blockchain. CEO Anthony Noto described the blockchain as a technology supercycle that will fundamentally change finance. Through its Galileo platform, SoFi is positioning itself as a core infrastructure provider for the entire fintech sector. This wave of innovation is being accelerated by the Genius Act, which President Trump signed this past July. However, the law is already a point of contention. A coalition of over 125 crypto firms urged the Senate Banking Committee this week to reject efforts by the banking lobby to expand limits on stablecoin rewards. While banks argue that these rewards drain traditional deposits, the crypto industry maintains their deliberate and calibrated balance. The urgency for this transition was underscored by a landmark report from Bank of America, which declared that the U.S. banking system is heading for a multi-year on-chain future. They argue that 24/7 settlement and institutional-grade infrastructure will eventually see stocks, bonds, and money market funds migrate entirely to the blockchain. Meanwhile, MSCI is considering a proposal to delist crypto treasury companies like Strategy from its major indices, which could trigger a forced sell-off of up to $11.6 billion in crypto assets by February. And on the security front, Chainalysis reveals that North Korea stole a record $2.02 billion in cryptocurrency in 2025, largely by embedding fraudulent IT workers inside companies to gain internal access. Across the Atlantic, ECB President Christine Lagarde confirmed Thursday that technical work on the digital euro is complete, positioning it as a strategic anchor of stability to be rolled out as early as 2026. With tax refunds moving on-chain and the White House's final 2025 push for legislative clarity, the message is clear. The infrastructure of the future is being finalized right now, regardless of the short-term market reactions. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.